Joining me now for more on this is Leith Van Onselen, co-founder of Macro Business and a former federal Treasury official. Leith, thank you for joining us. Firstly, how would you describe these latest GDP figures?
In a word, shocking, Danica, absolutely shocking. They pretty much undershot easily every economist's forecast and also undershot the RBA's own projections as well by a very, very wide margin. Now, the 0.8% year-on-year growth that we got in the September quarter was the worst in 32 years since the early 90s when, Paul Keating was Treasurer back in 1991. They also put Australia at near the very bottom of the OECD league tables for GDP growth. So, for example, the median growth across OECD economies for the year to September was 1.1%. We were 0.8%, despite the fact that we're running one of the world's biggest immigration programs and have very high population growth. And obviously, the per capita growth is an absolute shocker. So it fell by 0.3% in the September quarter, but it's fallen for 7 consecutive quarters, which is the longest run of per capita decline in Australia's recorded history. So it's an absolute shocker. Everyone's slice of the pie has been falling for 7 quarters. It's fallen by about 2.1% since the Albanese government came to office. And it's been borne mostly by the household sector. So the only thing that's keeping the economy growing in an aggregate sense is obviously very high levels of immigration and also record government spending. But the private sector economy, and in particular households, are going backwards. And that's the key takeaway from this release.
Yeah, well, just on that, I mean, you and I have spoken many times about Big Australia, but you've now crunched the numbers. How much of this can be attributed to population growth?
Yeah, so obviously, with the economy growing by 0.3% in aggregate and falling by 0.3% per capita, it means that population growth was 0.6%. Now, what we can do is if you actually divide the total GDP of Australia by per capita GDP, you get the ABS's estimate of population growth. And what it showed is that Australia's population grew by 168,000 people in the September quarter, and it grew by 638,400 in the year to September. Now, just to put that into perspective so people know what that volume means, that basically means that the Australian economy, or the Australian as a country, grew by a Hobart and a Darwin worth of people in just 1 year. And that there is why we have the rental crisis. And is also why the economy continues to grow despite the fact that we're all shrinking per person because we've got this mass population growth.
Yeah, look, that really is an unbelievable figure. And in the end, we are all paying the price for it. And, I've got to say, Leith, it feels as though we're being propped up by a Ponzi scheme economy. Is this lazy politics?
Yeah, it is absolutely lazy politics. We have basically 2 growth drivers in Australia, and that is importing as many people as we can. As I said, nearly 640,000 people in a year is absurd. And also record public spending. So public demand as a share of GDP has never been higher. It's pretty much all the jobs growth in Australia is now in the non-market economy, which is basically government-funded jobs. All of Australia's growth in the September quarter and also the June quarter pretty much was from government spending. The private sector is stagnating and going backwards once you adjust for population growth. So this is a really unsustainable economy we've got here. And the worst thing about it, Danica, is that Australia's labour productivity, so that's how much we produce per worker, has actually fallen 8 years. We've lost 8 years of productivity growth, and we're tracking at December 2016 levels. So our productivity is declining as well, which is why living standards are falling. And that declining productivity has been driven by obviously excessive levels of immigration, which has overrun housing, infrastructure, business investment, as well as the pivot from jobs growth away from the market sector, which is more efficient, towards these government jobs, which is less efficient. So it's a very unsustainable economy we have right now.
Jim Chalmers is today out blaming the coalition, saying we would be in a recession if the coalition had their way and that they are the real risk to the economy. Is that an accurate assessment?
Well, it all depends how you define a recession. If the coalition was going to come out and significantly cut immigration back to, lowish levels, yes, that would impact growth. Of course it would. But it wouldn't impact per capita growth, and I think it'd actually be good for per capita growth. And that's the thing we should all be worried about. It doesn't matter if Australia's economy grows in aggregate if everybody's slice of the pie is shrinking. And just to put a point on that, we could import 5 million people next year into Australia. We would have the world's best economic growth. But it's meaningless if our living standards are going backwards. People can't afford to buy a house. They're crushed loaded with infrastructure, and their per capita GDP and incomes are shrinking. And that's effectively the economy that we have right now. So it's a bit of a silly statement by Treasurer Jim Chalmers.
Yeah, it certainly is, Leith. Look, before we let you go, where does this now leave the RBA?
Yeah, that's the one bright spot about this. It's sort of, a negative turns into a positive. Because these growth figures were so weak, it will bring forward rate cuts. I'm pretty confident about that. Now, I don't think the RBA will cut this month when they meet later in the month, because it'd be too much of a pivot from what they've been saying recently. They've been very strongly suggesting that rates will remain on hold. But what I think we'll get is in the next meeting coming up next week or so, the RBA will do a pivot so that all their language will change, and they'll start getting us ready for a February rate cut, because these growth numbers are so far below what they were expecting. They're shocking, and I think that'll bring forward rate cuts, which perversely could actually be good for the government, because they might get rate cuts well before the next election rather than after the next election.
It's certainly going to be an interesting few months ahead, that's for sure. Leith Van Onselen, thank you so much for your time.
Yeah, thanks, Danica. Anytime.